the finals round of the 2020 Hack to the Future hackathon. And today's session is all about POC technology-enabled change, as the slide shows. My name is Iftach Rotem, and I'm a product management director in the payments organization and the innovation champion for payments in Israel. And together with me, we have Shirin Ben Zayed, who is the head of innovation at Finastra. And before we'll start with the presentations themselves, I'd like to introduce the judges that who are here today with us. First of all, we've got Annette Jardina, who is the Chief Technology and Innovation Officer in Avande, who is a Finastra partner. We've got Gal Landau-Yaari, who is a Senior Executive and Board Member and the former CEO of the Tel Aviv Stock Exchange. We've got Jaguar Advagal, the CEO of Jaguar Lawyers, who is a well-renowned Israeli blockchain expert. We've got Rajiv Nair, who is the Managing Director of Accenture, who is both a Finastra customer and the sponsor of this category. We've got Saman Sarbavastan, who is the Associated Dean of the École de Pont Business School in Paris. Also partner for the Hack to the Future with the joint certification program. And you'll hear more about it in the coming days and weeks. We've got Tom Cannon, who is the head of the SaaS Center of Excellence at Google, and Google is also a sponsor in the Hack to the Future for the best student submission category, another category that we'll be judging in a different event. And we've got our own Wissam Khouri, who is the head of international at Finastra, running all the field organization outside of the US. So first of all, thank you all for the judges for taking the time being with us, investing time and efforts in this preparation and reviewing. Really appreciate it, and we are looking forward to hearing your comments and questions and scoring, of course. A few words about the hackathon itself, about the Hack to the Future 2020. First of all, the hackathon was open both to Finastra and external participants from banks, fintechs, schools, and universities. We've had more than 4,600 hackers submitting more than 200 projects, which is quite amazing. There were 3 themes in this year's hackathon, and today, as we discussed, we are doing the review and the finals for the Embrace Technology-Enabled Change. We've got participants from more than 100 countries. I think the most nice ones are Fiji and Antarctica, so we've got really global span on all continents. It's 4 times bigger than last year. Last year's hackathon was quote-unquote merely 1,000 plus participants, so this time we've gone a lot bigger. We've got the top technology partners, and you can see the names on the screen. I won't go over them. And on January 27th, the winners will be announced. So post today's session, the judges will go into a deliberation session, and the reviews and scores will be submitted. And on January 27th, the final results will be known and published and formal. One last comment, Shirin, who is co-hosting together with me, is the one in charge for this hackathon. She orchestrated everything and spearheaded all the efforts globally. So a round of applause to her as well. She deserves most of the credit for this. Well done, Shirin. Well, it's fun.
It was a great teamwork. Thank you, Iftach.
This category's prize is $5,000 by Accenture, and as we said, we've got Rajiv here representing Accenture. Prizes will be known and published on the 27th of January, as just said. We've got 10 teams presenting here today. I won't go over them one by one, but these are the names, and this is the order of presentation. Each and every team will have 5 minutes to present, 2.5 minutes for the demo or video, and then 2.5 minutes for questions from the judges and Q&A. And each and every presenter will, or each and every team will present its own screen with the demo itself. And unless anyone has any other question before we start, in the interest of time, let's simply kick it off, Shirin.
Yeah, absolutely. So let's start with Team Liber navigating the transition. And they'll be sharing a video.
Sterling, have you met Sonia? LIBOR expiry date is set to the end of 2021. The term structure for 5 major currencies and 7 tenors will no longer exist. More than $400 trillion worth of contracts have to be renegotiated and converted to new normal. Welcome to the alternative reference rate world. The switch to ARR is the biggest and the most complex challenge in the history of financial services. Unlike LIBOR, ARRs are backward-looking, they quote overnight, and at risk-free rates there is no credit risk or liquidity premiums. Not to mention the additional layer of complexity introduced by the new and various methodologies of interest calculations. Let's meet Nurit, our accounts manager. She needs to switch to ARR all her contracts extending beyond 2021, ensuring economic and risk equivalence with LIBOR. Also, new loans must be under the new interest benchmarks with a balance between profitability and competitiveness. A difficult pricing exercise and a statement Nurit seems to agree with. Well, no worries. We happen to have what you're looking for. Introducing Arrow, our web application that will help you navigate LIBOR transition. Let's start with the existing loans conversion. Arrow is able to fetch Nurit's portfolios of LIBOR existing loans using open APIs integrated with Finastra core products or the bank's back office system. The value of the LIBOR loan is calculated in real time and will serve as a target value for the new ARR loan. We project ARR fixing and interest based on the powerful cash flow engine from our top-notch banking book risk solution, Fusion Risk, used by major players on the market. The spread that equates LIBOR and ARR is then calculated, and the break-even is determined, providing Nurit with the information she's looking for. Arrow does not stop there. Nurit can simulate various combinations and spread levels to assess the impact on the margin and profitability in real time. For loan origination, the same technology applies. Nurit can design the characteristics of the new contract, and Arrow will call Fusion Risk Cash Flow Engine to project ARR fixings and interest. The break-even is then determined based on fund transfer pricing methodology. The value of the ARR loan is calculated, and Nurit knows how profitable her loan is based on the margin, ensuring it is compliant with the bank's strategy and governance. And now, let's see the Arrow effect.
So that was the pitch from the team LIBOR. And our judges now have a bit less than 2 minutes for questions.
I've got a question. I've got a small question. Is that okay?
Yes, please.
Shireen, you're on mute. Yeah.
Yes, please go ahead with the question.
I'm more worried about how easy it would be for clients to manage that. Is it meant for more sophisticated clients or others more simple? Because it looks as if, I'm not sure how the UX is looking or is planned to be.
Of course. Yeah, well, the whole idea of this, the LIBOR transition, it's meant for the banks and financial institutions rather than for clients. So here what we are trying to do is we are answering two main questions in this whole, let's say, market shift, is that the banks will need to tackle the conversion of the loans from LIBOR to ARR, plus they need to deal with the new normal, meaning originating loans under the new ARR constraints. And this is where Arrow will help them achieve both. But to answer your question, this is meant for the banks rather than the clients.
Okay.
But that could be a good idea to extend the use case for the clients as well.
We do have another question from Annette. Please go ahead. Oh, sorry.
Hi.
Time is over. I'm sorry. Time is over, and we need to go with the next team. Sorry about that. Thank you, Mehdi.
Thank you.
Yeah, so next thing that we'll be presenting is the Augmented Performance Officer. You can take the control, and in the meantime, I'll just say that they are helping Performance Officer identify errors, correct and validate figures by drastically increasing efficiency and reducing cost. I see you already took control.
Hello everyone, we are the Augmented Performance Officer team. In the next 3 minutes, we are going to present our project started, give an overview of our model and solution, and before wrapping up, we will have a short demo.
Our project started from conversations with clients using Finastra's flagship investment management solution, Fusion Invest. Over the years, the production of the performance report, focal point for investors and managers, has increasingly become more and more complex. Why? The amount of data required by the newest technologies, the large number of teams involved in the management of the data, investors and portfolio managers wanting more frequent and better quality reports. Analysts concur, the biggest challenge identified is always the data quality and consistency.
Vincent is going to speak about the solution to these challenges.
Once the analytics are generated, the performance officer requests a check from our solution web UI. Our solution retrieves the data needed for the analysis from Fusion Invest via Fusion Fabric.cloud and Fusion Fabric Connect. It then uses adaptive kernel density estimation method to detect anomalies on the returns time series. It is a standard machine learning algorithm included in ML.NET. If anomalies are detected, Fusion Invest is notified and generates email notifications. The various business users can access the analysis reports via Power BI.
Fabien is going to illustrate what we have built with the team.
For our dashboard, Performance Officer consolidates and reports to Performance Analytics produced by Fusion Invest. He has full transparency on superior detailed results and can drill down in order to validate figures. With the huge data set available, it's challenging to spot any unobvious errors. This is where our solution brings value. A suspicious return has been proactively reported for the date of the 6th of January 2016 to the Performance Officer. He can check the data, fix it, before it causes troubles.
So, to sum up, with our solution, portfolio manager and C-levels benefit from faster and more accurate analytics. More informed investment decisions can be made, generating potential for growth. Second, more collaboration and transparency trigger operational efficiency. Less iteration ease the workload on the IT infrastructures and reduce costs and risk. Last, all users have more confidence in what they produce and can focus on more value-added activities. Thanks for your attention. Let's now open the line for questions.
Thank you. And we've got 2 minutes for questions. I see Tom raising hand. Please go ahead if you have a question, Tom.
Hi, guys. So my question is, how robust is the model that you've developed? So is this a nice to have where it will help somebody do their job? Or is it robust enough and can be retrained often enough that they will be able to effectively give over responsibility for catching these errors to the system?
So thanks, Tom. It's a very good question. With our implementation as part of this proof of concept is quite, for the moment, quite basic. Even, I mean, we've just implemented the standard algorithm, but of course, the idea for the future would be to enhance and tailor a little bit the solution to make it more appealing to clients and detect a wider spectrum of errors. For the moment, it's just based on prices, returns, but of course there are many more pieces of data that are causing errors in the reports, that leveraging our expertise with Fusion Invest, we can help our clients. Yes.
Thank you.
Thank you. I see we have another question from Rajiv. Please go ahead.
Yeah, this is good and good operational challenge there, right? I have two questions. One, how do we leverage external data for it? Is it all internal data you're looking at? One. Number two, what's the kind of self-service capability you are bringing in this reporting? How do you decouple service from the technology?
So to answer your first question, the data is directly fetched from what Fusion Invest, Finastra solution for investment management, is producing. So we are basically analyzing the returns, the raw data that is in the system. As you could see on the slide previously presented, it's basically going through Fusion Fabric in order to fetch the data. Our solution it can be on the cloud. And what was your second question? Sorry. Over.
Sorry, no time for the second question. Thanks a lot,
Thank
Fabien.
Thank you. Next up are Popbox, the first Canadian digital marketplace in real estate.
Yes. Hello, I'm Daniela. I'm representing Popbox, and I'm a product owner within the Canadian Mortgage Technology Division at Finastra. In a nutshell, our product Popbox is a digital marketplace in the form of a responsive web app that would help home buyers achieve their dream of owning a home. It brings together all actors within the home buying process so that the end user can easily make an educated decision on one of the most important investments in their lives. We especially targeted millennials, first-time buyers, and newcomers to Canada. The monetizing model that we are envisioning would be similar to the Canadian industry standard, which implies the accumulation of basis points from each funded mortgage application that has been originated on Popbox. On top of that, we could capitalize on digital marketing instruments, allowing mortgage professionals to advertise themselves. As far as technology goes, we used AngularJS, HTML5, Java, and MongoDB with SQL. And now let's take a look at the demo video. Okay. Let me then introduce you to Popbox, your one-stop shop for home buying. It might not be the best thing since sliced bread, but it's sure got pretty much everything you need, from affordability assessment to online mortgage application, to connecting you to a mortgage professional and, of course, helping you land the perfect home. All from the comfort of your, well, not yet home, but you get the point.
But aren't there like 1,000 websites and tools that give you just that?
Not quite, because what's different and smart about Popbox is that you have all the tools related to home searching and home buying in one place so that you don't waste energy and time looking for calculators, houses, realtors, or lawyers separately. Think of it as matchmaking for your home buying experience. So let's take a closer look and see what this is all about. First, just by answering a few simple questions, you already know what you can afford. Then, one click later, you get a selection of houses within your budget and area of choice.
What about proximity to groceries, parks, transit?
We've got that covered. Every home listing has details of not just the property, but everything that's around it, as well as a specific mortgage plan if you were to buy that house. If something catches your eye, you can easily schedule a viewing and furthermore connect with a mortgage broker so that you're sure you're getting the best rate out there.
Okay, hang on. I don't really know any mortgage brokers or have any referrals.
No worries. We took care of that as well. With one click, you can find brokers and real estate lawyers around you and see the ratings and reviews to help you choose the right mortgage professional for you.
Great, so I wouldn't have to go meet them and do all that paperwork, I imagine.
Well, your broker would be more than happy to meet you in person, but you don't actually need to shake hands to close the mortgage transaction. You'll be able to upload documents and sign them digitally. All this on your tablet or cell phone. Sounds dreamy? I know, and there's even more. If it's all Greek to you and you're unsure of all those fancy financial terms, or you just want to know what's better, fixed or variable interest, Popbox has a great selection of articles, links, and podcasts that can get you up to speed with the latest news in the industry.
Thank you very much, Team Popbox.
We've got 1 minute and 40 seconds for questions.
So, can I pump in?
Yes, please.
So, well, I very like your pitch at the beginning. I usually don't like entrepreneur that jumped directly into the deck. So, and I like that you showed us the small video so we can feel what the end customer sees. But about the service, we already have lots of sort of platform and banking and as a service, this kind of A to Z around mortgages. Why you are sort of this killer apps?
Well, indeed, it's true. Just as as in the pitch, just as in the video, that there are a lot of tools out there, but none of them are really connected to each other. I mean, the end user would have to look into this app and then realtors.ca, for instance, and see there the houses, and then try to connect with the broker using, I don't know, the Canadian mortgage app. That's why we are really emphasizing the fact that this is a digital marketplace, in the sense that we are actually putting all the actors in one place and letting the end user just do everything so much easily and not really be let's say bothered by the noises that the digital applications might bring, because everything is just in one place. And also the educational part, so to speak, where we have let's say news and podcasts that are selected and obviously let's say neutral, or what
Time is over.
Thank you. If I might give you an advice, because I'm actually honored to be here, start with the educational part, because we have lots to. So good luck. Thank you.
True. Thank you very much. Thanks.
Thank you, Gal. Moving on to the next team, blockchain for sustainable tourism ecosystem. Are you on? And thank you.
Hello, everyone. First of all, thank you for this wonderful opportunity. It's not every day that we get a chance to showcase our idea to nearly a dozen industry veterans at the same time. So thank you, Finastra. Thank you, partners. Over the next couple of minutes, we will showcase to you sustainable tourism, which is a concept jointly developed by Capgemini and Swinburne University. If one were to draw up a list of the most polluting industries or industries that contribute to climate change the most, you would have energy in there, transportation, manufacture, and among them, surprisingly, would be tourism. What makes tourism unique in that list is that it contributes almost equally to almost all forms of pollution: land, air, water, noise, etc. The lifetime impact of goods and services are much, much greater than what we tend to think of, and in a way that makes tourism a silent killer. We know tourism as an industry started to grow and grow rapidly. So the solution to this lies in embedding sustainable solutions in tourism that can help reduce the negative impact on the environment. Contrary to common line of thought, in case of tourism, sustainable solutions will not be a compromise, rather a step up. Why? Because as far as tourism is concerned, in the next couple of decades, Gen Z will constitute an overwhelmingly huge proportion of the customers. And for Gen Z, sustainability is among the biggest lifestyle choices. So essentially, what you're doing is merging two of the future customers' biggest lifestyle choices. It's a recipe destined for success. Sustainable tourism draws inspiration from the idea of a digital marketplace. Imagine an online platform or a portal where you log in and find a multitude of sustainability-linked challenges related to tourism. There are challenges hosted by airlines, hotel chains, even public organizations, all promoting sustainable behavior. For example, you might have a challenge hosted by Airbnb that rewards you based on the water or electricity you saved during your stay, a challenge by an airline that rewards you based on the weight of your luggage, and so forth. Based on these challenges, based on the challenges you complete, you are provided tokens. We call them SUS token, which can be accumulated and redeemed just like any other loyalty program. In essence, sustainable tourism is a sustainability-linked loyalty program, the difference being that the whole of it works on a blockchain backbone. We use blockchain to create SUS token, which are tradable digital tokens. The partners who host the challenges writes business rules onto the blockchain in order to govern the transactions and the challenges. The concept is simple and straightforward, but the benefits are multifold. for the owner of sustainable tourism, ideally a bank, and the partners as well. Sustainable tourism becomes a perfect avenue to align their initiatives to the 17 SDGs defined by the UN. For the bank, it can provide additional customer information, which can be used to further enhance their own products and services and increase customer stickiness. Partners may find this as a cost-effective opportunity to tap into the sustainability conscious customers' mindshare. And as for the customers, the platform works as a I'll take a pause there. What you see on the screen is the last bit that I have, which talks about the benefits of sustainable tourism to the different parties involved. Given that we have only a very little time, I'd like to use the rest of the time to answer any questions which the judges might have.
Sure. I see we have a question from Annette. Please go ahead.
Hi. It's a nice concept. It's an interesting one, but I'm a bit confused as to how it ties back into banking. I can see sustainable tourism as a really great idea. I can see a use for it, but I'm not quite sure I get how it works back to a bank.
Your question is pretty spot on, because the way we have defined sustainable tourism, it can be, any organization even related to tourism can be owner of the platform. But the reason why we say, if you can see here on the left side of the screen, a bank is the perfect owner for this particular platform. The amount of customer data that they possess can be linked back to the program in terms of, some banks have goal-based savings programs already. So, and among those, travel becomes one of the biggest goals for Gen Z going forth, which is why we think, platform, when you think of a platform owner, the first organization that comes to our mind would be a bank. And the upsides or the, future developments or the value that can be drawn from it can also be maximized for a bank as opposed to, any other player.
Thank you.
We've got another 10 seconds. Saman, please go ahead.
Yeah, I'm not sure if we can cover the question, though. I was interested in technical feasibility of the implementation of the solution, specifically about the data points that you would need to have, example of Airbnb. So I'm not sure if we can cover this.
Yes, so with respect to that, some of the challenges are yet to be solved. We do agree, but it's much more easier. It will be much more easier for us to develop this concept with a blockchain backbone as opposed to developing blockchain as a support to any other industry use case. It's the consensus mechanism that could be used for something like this would be much easier.
Thanks. Sorry, time is over. Thanks a lot.
Thanks a lot. Bye-bye.
Thank you.
Next team is the AI-powered mortgage advisor. Do we have, are you guys ready?
Do we have Kostav on the call?
Oh, sorry, I was muted.
Yes.
Hi, judges. My name is Kostav Sharma. I'm a co-op student currently working in the Canadian Mortgage Technology team. And I'll be playing a video demonstration of our hackathon project, after which I'll be happy to answer any of your questions. So let's get started. Imagine you're a mortgage broker using Expert Pro about to submit a loan application to a lender on behalf of your client, but you're unsure if the loan request will be accepted or denied when you submit your client's application. Repeatedly sending your application is taxing for the system to process, and it would be time-consuming for the lender to keep reevaluating your applications. This scenario inspired our hackathon team to create a proof of concept for an AI-powered mortgage advisor. With the goal of advising mortgage brokers, the chances of their application being accepted or denied by the lender. We call it LPM, which stands for Loan Prediction Model. Let's do a quick demo. Here's our LPM app, which is a form requesting key data points about the application. Let's fill it out with some data and see what we get. After we hit submit, a pop-up appears with our model's prediction about this application. It looks like this application would likely be accepted. Let's try another scenario. It looks like with this scenario, our model predicts that it would be unlikely for this application to be approved by a lender. We use the customer loans and demographics datasets from FusionFabric.cloud to train our model. We created an API to use our model using Flask, which we connected to a web app containing a form made with Vue.js. When a user enters data into our form, the data is sent to an API, which processes it and returns either a 1 if the loan will probably be accepted or a 0 if the loan will probably be denied by a lender. After the model parameters are learned and fixed and no learning is taking place, we feed the test samples to the model. The number of mistakes the model makes are recorded after comparison to true targets. Then the percentage of misclassifications, as known as accuracy, is calculated. We tried several loss functions to help improve the model accuracy and achieved about 91%. To bring our proof of concept to the next step, we would require the use of production data to retrain our models so it can output a more realistic prediction. We would do this by creating unique models for each lender, as different lenders have different requirements to grant a loan. We believe our machine learning application can provide mortgage brokers using Expert Pro with the right business intelligence at the right time, which lets them ensure that their clients won't miss out on a good housing deal by providing them faster turnaround.
Thank you. We've got 2 minutes for questions, and I see Tom has one already.
Hi guys. What's your plan to monetize?
So the plan to monetize is based on the revenue generated by our platform, which is Filogix Expert Pro, which is a point of sale system for mortgage brokers. So basically, we generate revenue every time that the mortgages are being funded by lenders. So the more lender approvals we get, the more revenue we make. And since we're basically trying to increase the probability of applications being accepted, we increase the frequency of accepted applications, and thus we directly increase the revenue that Finastra can make.
So would this be bundled with the existing application you just referred to as a feature add-on?
Yes.
Okay. Thank you.
Thanks. We've got another question from Rajiv. Please go ahead.
Yeah, this is good. One question is primarily this looking at historical data. So when there is a policy change in the mortgage guidelines, right, will there be lag in the system, or it will wait for the lenders to come out with this data?
So yes, we would have to update the system. If there was to be a change in the lender policy, each lender would have their own model, right? So if in the case there is a lender that changes their policy, the mortgage broker can try to use another lender to try to process the mortgage. So there wouldn't be any lag, but there would be a developmental cost if that's a situation.
Thank you. We've got another 20 seconds if any judge has another question for Gustav.
Yeah, quickly, I enjoyed quickly something about hurdles or setbacks from privacy regulation.
So privacy regulations, we are very close with the lenders that we work with in our platform, Filogix Expert, and we actually collect the data that we would need to train the model already. So training the models and collecting the data is something we already would have access to. It's just that, you know, if we get in like access to incubating the project, we would be able to do it very easily with little regulations.
Time is over. Thanks a lot, Gustav.
Thank you.
Thank you very much. Next team would be the Fusion Lawyer.
Thank you. Hello, everyone. Can you hear me? Yep.
Yes, we can.
Please go ahead.
Welcome, everyone. I want to share with you our project Fusion Lawyer. We all know how complex, expensive, and stressful it is to face legal matters and to work with lawyers. It can happen to all of us, a business issue, a family problem, accidents, and we want to change the way people face legal issues. The concept is not new. It started with template letters in the year 2000 and helping people like you and me to communicate legal requests in the right way. Over the last decades, model letters progressed into claim management that can be assisted by more templates and guidance. But still, this is mostly for very simple day-to-day cases, such as airline compensation claim, like the website donotpay.com. We are bringing a further step, targeting some of the complex legal matter and ensuring full end-to-end support of the journey, or the legal journey. Fusion Lawyer is based on 3 pillars. Firstly, the use of open models and open API that are built using the standard legal guidelines available in countries and states. This provides transparency and applies the same fair rules for everyone. Secondly, the use of robotized assistants to guide people to gather the information they need. It is simple, step-by-step conversation like a one-on-one. We ensure that nobody is disadvantaged because they would struggle with paperwork or bureaucracy. Thirdly, processing of data, the data that already sits in banks, in title companies, in government agencies. It helps to consider all the facts, removing the complexity from the end user and to enable comparison with other similar situations. In short, it's about transparent rules and helping people to build their case with confidence that we gather all facts and that we can validate the fairness of the outcome. What we also believe is that banks or legal tech or companies like Accenture can help people in the long term. This does not have to be just a one-time effort. It can be turned into a viable business to help people in the long run. We have studied the business case and it has great potential. For example, if we take just the example of divorce in 3 countries, US, UK, France, with very conservative assumptions, it can turn into a viable business so that people can be helped and that the bank may sell additional financial services. This is a selling model at the bottom of the screen. We can review later. During the demo, you will see the front end of the application. So I want to give you a chance to look at the back end, what is behind the scene, the architecture that extracts the data where it already sits, use open models, provide results, and then run the feedback loop. Now going to the demo. So I will switch to a live demo on Azure website. It's run on the cloud. So this is our Fusion Lawyer site, and we have built for this demo the case of divorce. When I click here, we can go here through the natural conversation, which I've already answered, with very simple questions like, do you have kids? How many? And then the system will be able to either get the data, the certificates directly from government agencies with the consent of the user, or to record in the to-do list so that it can help people later to fill the right paperwork they need to fill. Finally, we can review the case. And when I want to run through the analysis of the case, it will connect to Finastra platform, fusionfabric.cloud. So I'll do a login. And by connecting to the platform, it connects to the bank system. And here we have a demo system with North American demo bank and data.
Gregory, sorry to interrupt you. You just have 1 minute left.
Okay, I'm there. So this is the analysis that was obtained from the bank data connected to the platform. And the system can simulate, for example, the allocation of assets, and you can very simply drag and drop to allocate between users. In summary, what I want to say is Fusion Lawyer brings value over the existing systems that banks have, over the existing data that banks have, and over the publicly available rules that are used in many legal cases. It helps people as a viable, sustainable business for banks, legal tech, or service company. Thank you for your attention. We have a couple of minutes for your question.
We've got just a couple of seconds, and we have a question from Annette.
Yeah, so I think it's a nice model. My question would be, in your commercial model, you've talked about how you would sell it to the banks. Do you see lawyers wanting to pay for something that's potentially going to reduce their business quite a lot?
Yeah, I think so. Lawyers will pay that as a software that they purchase, and probably the key buyers would be banks or lawyers who want to disrupt the market. They want to scale, they want to go low cost. So disruptors will be the main buyer. Disruptors can be large lawyer offices, or banks with lawyer activities. That would be the key buyers, right? It's scalability, repeatability, industrialization of the model. And we want to push adoption by making it free for people, so people can look, they can request it, so they kind of push the market to change.
Thank you.
Time is over. Thanks
Thank
a
you.
lot, Gregory.
Next, presenting intelligent cash forecasting.
Thank you. Yeah, I'll just share my screen. Oops. You able to see my screen and able to hear me?
Yes, we can.
Thanks for giving the opportunity to present intelligent cash flow forecasting. The problem we are trying to address here is about the cash flow forecasting. Cash flow forecasting allows the businesses to estimate their cash positions in future and make informed decisions. Scenarios where we have observed is most of the cash flows are done outside the cash management systems. We work with Fusion Cash Management System as a product, and then the scenario we have taken is the corporate banks which is trying to use the Excel spreadsheets or any other manual methods to do a cash flow forecasting outside the cash management system. The challenges or the limitations faced by these users are the data is not consistent and it's very bad data, and there's been a lot of manual adjustments done on the data which negatively impacts the forecasting process, and also there is no standard templates. Given the amount of historical data they have to work around, it's a very tedious and time-taking process. The solution what we are coming back with for this is to provide an AI/ML based engine for doing a cash flow. There is a 3 components to it. One is preparing the data ingestion, and then exploration of the data, and then the forecasting engine. AI/ML based engine helps to predict the cash flow. The output of this will be the consolidated cash flow, and it also has an what if simulation capability which can be entered by the user, and it follows a champion challenger model selection. The key business outcomes that will be provided is the real-time and accurate cash flow forecasting. Prudent decisions can be made by the customers, and it gives a better visibility for executives through Intuitive dashboards. A quick process on the solution. There is a 3-stage process. Data analysis and pre-processing is the first stage where the data ingestion and exploration happens. Then there's a model selection. The model is trained on various set of data to identify the right model. We use Prophet, XGBoost, and LSTM time series as a models for this POC. And finally, the output is scored. The output is been shown here as an screenshots where there is an receivables, payables forecast and a cash flow forecast has been provided. The model, as I mentioned earlier, operates on a champion challenger model option, and it gives you a scoring output. This gives you a flow about how the data has been prepared and then fed into the model and then follow to the scoring. Finally, there is a lot of other possible opportunities are there to expand the solution by providing a simulation what if analysis. It helps to identify any unobserved patterns in the payables and receivables. Explainability it can be developed. Data quality can be improvised because that's a key thing for the prediction, and it can be integrated with the enterprises through APIs. Thanks. Open for questions.
And we've got 2 minutes for the questions. Wissam, please go ahead.
Just a question. Why would you believe there's a market for such type of solution that the banks do not already have as part of a larger solution?
I think this is the way we have structured this is to be an extension of an existing cash management solution. It could be a standalone one, but knowing the Finastra's offering, what we wanted to do is offer this as one of the extension functionality to Finastra Cash Management. So this will be an add-on to that, where this will provide more capabilities along with the other functionalities already available. This might not be able to work as a standalone. As you mentioned, bigger solutions might already come with this cash forecasting.
Thank you.
I want to further. Oh, someone else. I just cut it. Someone else. I want to further ask. It's not about the market. It's just what's the problem. I was a COO and I was dealing a lot with budget. What is the problem that you are actually trying to solve that we don't have? We have lots of traditional solutions that are actually giving us more than cash flow.
I think the problem we are just embracing the technology to provide a more advanced solution, and also we are providing an real-time based forecasting where the users will be able to provide a various scenarios where they want to see a forecast and able to get a real-time forecasting, and by using the models that will be able to identify the changing trends and patterns and able to give an intuitive dashboard. So we are using the technology and then enhancing the capability to provide a better cash flow forecasting to make better decisions.
Thank you. Good luck.
And time is over. Thanks a lot.
Thank you.
Nice.
Thank you. Next team will be presenting aggregation, abstract data aggregation on FFDC. David, I believe that's you.
Yes, absolutely. Can you guys hear me okay?
Yes, we can. Go ahead.
Perfect. And you can see my screen. Good afternoon, good morning, good evening, depending where you are in the world. I'm David Noe, CEO of FinGoal. And today I'm presenting our hackathon submission, abstracting aggregation to the Fusion Fabric.cloud layer in partnership between our company FinGoal and InvestNet Yodlee. Let's just focus on the US for a hot second. The average US adult has 7 different relationships with 7 different financial institutions, which means any individual financial institution that wants to serve an end user doesn't have the full picture of that end user's financial life, not without aggregation. And today we see bank tech opening up. I'm not asking you to read this slide. Most of it's info that you already know. But here's what's important. Through FFDC, all of a sudden we have an incredible bank tech platform that is empowering third-party fintech developers like me to serve individual financial institutions and bring all sorts of cool new innovation to play. However, what we've discovered, we've run into this problem firsthand, is that individual fintech developers serving the same end user at the same financial institution often needs to aggregate data from those different up to 7 financial institutions for each individual end user. Right now, and let's look at a case study, we have a really complicated system where every individual fintech is individually aggregating data from a panoply of different aggregation suppliers, people like Yodlee, Plaid, Microbill, Finicity MX. And each time that one of us has to do that, we're paying for it again and passing that cost on to the financial institution and ultimately to the customer. Each one of these aggregators has different business or has different data models, and it just makes the entire system messy and expensive. So we brought something as a proof of concept in partnership with Yodlee that's better than that, where each financial institution enables each financial institution can have aggregation at the FI level, and the individual fintechs that serve them can each hit that same aggregation up at the FFDC layer. This is driving simplicity, cost efficiency, and most importantly, higher marketplace adoption on FFDC. If the cost of implementing individual innovations from third-party developers like us goes down, adoption will go up. FIs can innovate faster, and end users can be served better by those existing FIs that are all on the FFDC platform. Let's compare two models here. This is the solution, and this is what it used to look like. Here's the current state as a mess. Here's what we brought to bear. Again, a spaghetti of mess and something that's a hell of a lot cleaner, where aggregation is, again, abstracted up to the FFDC layer once per financial institution, and each individual developer can access that. You can go and look at the demo that's really developer focused with a bunch of API calls and things like that. But I want to take the rest of the time and just go into Q&A. Thank you.
Thanks. We've got 1 minute and 30 seconds for questions. Rajiv, please go ahead.
Yeah, a nice idea. See, aggregation comes with its own challenges, right? The first part I would ask, who will be the buyer of the service? Or yes, who will host the service? Yeah.
Yeah, the financial institution is the individual buyer of aggregation, and then the individual developers are service vendors of the FI.
So on a continuous basis, right, when you look at it, you are simplifying the complexity of API variants, standards and all that, right? So how do we run it as a service when new models come in and there is no common standards across financial institutions?
That's the importance of using a great global partner, somebody like Yodlee, who operates all over the world and is partnering with the largest institutions and regulatory bodies for both industry-driven, say, open banking standards, as well as regulatory schemes that we see in other parts of the world.
Thank you.
Well, as much as I understand your solution, well, I'm a big believer in aggregation, but I think that the success of aggregation must be combined with a lot of data and AI combination. That's why I believe that just big tech can really enjoy aggregation. So what kind of data pools do you have? And besides financial institution, can your solution, because it's very beautiful, can be used in other sectors?
Yes, so we're not inventing aggregation, right? We're taking an existing aggregation solution that's currently disparate with individual relationships with developers and bringing it up to the FI and FFDC layer, right? Now, once we've got aggregation turned on with somebody like Yodlee, we can access other data pools, for example, utility data, insurance, liability, wealth, right? Now, Paul is in the business of...
Time is over.
And so,
fantastic questions. When you represent, may I offer that you just offer your broaden service and application, because this is beautiful what you're doing, and good luck.
Thank you.
Thanks a lot, David. Thank you, Gal.
Thank you very much. Next one up, FinSave. Do we have FinSave? Thank you.
I hope you can hear me.
Yes, we do.
Okay.
Sorry, I cannot hear. If everyone is hearing?
We don't get the audio. Bindu, if you can please fix that.
Oh, okay. Just a moment.
I still cannot. Oh, okay. Oh, you're fixing it? Well, thank you.
Yes, I am. Okay.
No worries. We'll start the timer again, Bindu.
Traditional banks are losing customers to competition and digitalization. 2/3 of the customers are planning to switch to fully digital platforms in the near future. When customer loyalty is fading, social responsibility is one strategy that can improve reputation and customer loyalty. Studies have shown that co-created social initiatives offering value to customers can make them more loyal. FinSave, integrated to any banking core, can help banks organize and manage charitable campaigns. Customer donations to these campaigns are saved by account balance rounding, making donations effortless. Customers can track the status of their savings and also the progress of the campaign, making donations transparent. We see FinSave as the face of the bank's social responsibility activities to co-create value, engaging customers. Predictive customer engagement can reduce the attrition by 1 to 2%, which directly translates to a 1 to 2% growth in the net income. The tech stack. FinSave is powered by Angular 6 on the front end. Backend is driven by .NET Core, Python, Flask, FFDC APIs, and MongoDB. We've used sample dataset from Kaggle to drive the demo. Seeing is believing. Let's see a quick demo of FinSave. What you see is the program dashboard listing active and closed programs. An admin at the bank can create a program with basic details like the total fund amount, description, start, and the end dates. Once a program is saved, all customers receive an email notification and on-screen notification on the bank's home screen. The notification leads the customer, let's say Nancy, to the list of active plans. She can set up a contribution plan with minimum required details like the contribution amount, the rounding frequency, and the mode. Once the details are saved, FinSave analyzes Nancy's account balances for the last 2 years and predicts whether the amount can be saved with the criteria. It also recommends alternatives if the donation amount can't be saved. Nancy can view the status of her contributions as well as the program's overall progress on her program dashboard anytime. Automated savings stop when the donation amount is saved or at the end date set by Nancy. Any contribution that Nancy makes to a tax saving program will also be added to her year-end statements. Save small, donate big. Happy donations. So judges, that was our presentation. So I'm Bindu from Team FinSave with a quick context. So all 4 of us in the team wanted to donate, but we were not actually making those donations. Trust and transparency issues, lack of awareness of the campaigns were major reasons, but there was also this feeling that the donations need to be big to make a difference. And it's not always easy to save up big. So FinSave tries to solve all these concerns that we had and help banks with their customer engagement and retention. In short, FinSave is a solution that's very close to our hearts and hope that it'll make donations trustable, transparent, and hassle-free as possible. So thank you. Now we're open to questions.
Thanks a lot, Bindu. We've got 1 minute and 45 seconds for questions, and we've got a first one from Annette. Please go ahead.
Hi, Bindu. This is great. I think all the banks I work with are definitely looking for sustainability. So I just wanted to confirm: is the concept that people can just round up? And by rounding up, they're saving pence, and then when the amount gets saved, it goes across to the charity.
Yes.
And are you looking that you would monetize this by getting the banks to buy into the platform and then promote that platform as you go forward?
Yeah, there can be many ways of monetizing. For the banks, it can be, there is an intangible benefit of building the brand loyalty and customer loyalty. And of course, the customer retention and engagement. It translates to, every person or every 1% of retention, customer retention directly translates to a net worth of 1%, income growth. So that is one avenue where we see the growth in banks side. Plus for us, it can be a service rendered, and for every service, you can actually, make customers pay. Of course, at the core, this is about social responsibility. So more than profit, what you do to the society and what you give back is what counts. So yes, if I answered you correctly, or at least, yeah, thank you.
Any other questions or anything to add, Bindu? We've got 10 seconds left. I see we have Rajiv raising hand, maybe quickly.
Yeah, Bindu, I think this goes with the purpose-led banking as a theme, right?
Right.
Like that idea, but did you discuss with any of the banks on tying up NGO into this ecosystem and lineage, right?
Like, though we didn't actually go to the banks and discuss with it, but we did really think about, how banks can partner with NGOs. The one primary reason why we thought of bringing banks into the equation was that we wanted to build trust, and we also wanted to make the banks who know the local turf, they know what their local people need. So they can go ahead, team up with NGOs or local community or even a group of their own customers to come up with, meaningful campaigns and actually make them contribute. So yeah, anybody can partner with the bank.
Sorry to interrupt you, Bindu. Time is over. Thank you. Thanks a lot.
Thanks, Rajiv and Annette, for your questions. I appreciate it. Thank you.
Thank you very much, FinSave and Bindu. Last presenting team for today, Fusion Credit Face, and we've got Sean.
Hi, good morning. We're going to open up with a video. I'll go ahead and share my screen right now. Hi, welcome to Fusion Credit Face. Our goal is to provide a flexible global solution that connects to credit bureaus and reduces development costs. The challenges facing lenders today and fintechs is that in order to make informed credit decisions, they need to be able to pull credit reports from multiple credit bureaus. This requires multiple solutions that can be quite costly. There is also the cost of ongoing maintenance and enhancements that the bureaus might require of you, or if you choose to enter into a different market, you might need to select a different product or work with a different bureau. The power of Fusion CreditFace lies in our standard API, using a single set of fields that will support any credit bureau anywhere in the world. The origination system will only have to map to our solution a single time, while the solution will manage the multiple integrations through the bureaus. As a proof of concept, we can certainly provide a user interface that interacts with this API. Here we can see a request where I'm going to enter some basic information and then request reports from 2 different credit bureaus. Once the response is received from the bureaus, we can then display some high-level information for the user. We have a recent example here at Finastra. One of our team members worked on what's considered a small maintenance project for one of our products, and it still costs close to $100,000 in development cost. Finastra has several systems that interact with bureaus that require the same update. Fusion CreditFace would have allowed us to just make that update a single time. A common barrier to market is security. Fusion Fabric.Cloud already has that taken care of. Fusion CreditFace is a cloud solution. Therefore, we can offer cloud storage as well for additional cost savings. In today's dynamic environment, events such as COVID or a recession requires that lenders rethink their origination practices and rethink their product offerings. Fusion CreditFace will enable them to be able to do that. It doesn't have to be so complicated. Thank you.
Thank you very much, Juan.
Oops. Sorry about that. Okay, so now I'm available for questions.
We've got a bit more than 2 minutes for questions. Any questions from the judges? I see we have one from Tom. Please go ahead.
Hi there. So I guess my question is around monetization. I get that this seems like it would be a fantastic feature to include within the Finastra product suite. Is there an opportunity to monetize it directly via metering of the API, or are you effectively adding a kind of transaction charge on top of all those calls that would have cost anyway, and you're making them more expensive? I'm just wondering about the trade-off between developer time and convenience versus additional cost, and how you might think about that.
Yes, our thought is that it would be transactional, would be the easiest way, I think, for fintechs or lenders to adopt it. So yeah, it would be an additional fee on top of what the bureau would already charge. Yeah.
Okay.
But still much cheaper than having to redevelop a solution each time. Yeah.
We have another question from Saman. Please go ahead, Saman.
Yes, thank you very much. So what are the workarounds today? If your solution is not there, what is being used?
So there are a few companies out there, but what we have found is those solutions require you, as those bureau make changes, you still have to incur those development costs to make those enhancements. So in other words, if a bureau requires an additional 5 fields or decides to return additional 5 fields, that vendor still expects the lender or the origination system to make those changes as well. And whether even it's access changes as well is another common enhancement that's requested. So yeah, the workarounds today are costly, and they usually require, if you don't make the changes in time, then you would have a disruption of service.
Time is over. Thanks a lot, Sean.
Thank you.
Right on time. Just a second. Okay, so with the Fusion Credit phase, we wrap up the finals round for the POC technology-enabled change of the 2020 Finastra Head to the Future Hackathon. Thank you very, very much to all the participating teams for the great effort and great demos and for all the effort invested in it. And needless to say, to all the judges for your involvement, participation, activities, and willingness to play ball. As you can see on the screen, as a reminder, the winners will be announced on January 27th, and we invite you all. There are 32 apps already available on the Finastra's FusionFabric.cloud, already 32 POCs and live applications available for you to rate. It's not related to this specific category in the hackathon, but to the audience choice. And you can download the app and rate it. And with that, Shirin, unless there is any other service announcement from us, I think we can thank again all the teams and just ask the judges to stay for the deliberation meeting. And
yeah.
Thank you again.
Thanks a lot, Yiftach. Thank you to all the teams and to the judges. For the deliberation, we'll be moving to a private Teams call. So thank you all, and for the judges, see you there. Thank you.
Thank you. Bye.
Thank you.
Thank you,
judges.
Good luck.